Again, on April 26th, I told you we got a bullish reversal of conditions, but stalled at the moving averages. We pulled back. We got our back-to-back bullish candlesticks. I talked about that. Made a whole video about the back-to-back bullish candlesticks. Be watching for a rally back towards the 200 period on the 60-minute chart, or exceeded it to fill the gap, possibly go back and form a divergence on the RSI in the weekly time frame. We have now filled the gap. We're just below this level here. The bullish reversal of conditions remains. Holding above the 10. The 10 has now gotten above the 50 this week, but the 20 is still below it. And then again, now have other gaps to be watching. Reversal of conditions flipped the swing trend signals all back to bullish. So now it's a waiting game. Do we get higher highs, go up to the upper channel line, or do we get a lower high? Again, we don't have a bullish arrangement of the moving averages yet. So I'll be watching to see what happens with the CPI. Do we get a CPI sell-off? Do we get a CPI rally that takes us to a new high? And then what becomes of the 9 count that's forming on the S&P and NASDAQ in the daily time frame, along with the Dow, the 13 count in the weekly time frame, which again I will be showing you in this video. Again, this is the S&P 500 daily chart. And if we don't make it up to the upper channel line right now, we may later, but if we don't do it right now, if we end up getting some kind of sell-off or even possibly a lower high, or going up and hitting this peak but then turning, again, we still have that 20 below the 50-period moving average here. Over here you had that. Momentum couldn't turn positive. Now, if momentum turns positive and we go make a new high and you get the 20 back above it, you get a top like you had in 2022. In January of 2022, we had seen divergence develop with momentum. But if we can get that 20 back above the 50, again, the potential for a large double top pattern. We had a little small one right here, but a large double top pattern. Over here, we couldn't make a new high. We tried to, we couldn't do it. And ended up dropping back below the 50 and the 20. So just some things we're paying attention to with the CPI tomorrow. Do we rally to a new high, or do we begin to retreat off of the highs? So far with our rally back up, momentum is still negative at this point. So watch the 20 and the 50. S&P daily chart. Same thing going on with the NASDAQ daily chart. Momentum still negative. Again, we had a divergence up here that gave us an 8+% sell-off. We've rebounded back up to fill the gap today, but again, momentum is still negative as we're above the 50, the 200, they're above the 50 and the 20 still below the 50. Very similar to what we had over here, so we'll be watching to see what happens. Do we go make new highs, or do we retreat off of the highs with NASDAQ and S&P? Momentum signals turned bullish. Late April, we saw swing trend signals begin to turn bullish after that. They remain bullish. Can they remain that way? If they remain that way, we could again head up to the upper channel line on the S&P 500. Talked about much if we retreat, it's still possible we get a lower high. Talked about both scenarios in the weekly time frame for weeks and weeks and weeks now before we ever even reached the low, which I've been showing you that weekly chart, which you'll see again. I show it in nearly every video. Momentum signals have turned back to bullish after we hit that 20-week moving average 3.5 weeks ago. Trend signals have turned bullish, ones that I've shown you over time. See if they remain that way. It means we're either going up or we're going sideways. That's what this is telling us. I told you this level right here was really the line in the sand. And again, we're kind of going flatlined here. If we could hold above it, when we got the doji, I told you if we hold above it, it challenge the highs and go up to the upper channel line. If we retreated off of this level, a shot at the gap fill, overthrowing the 78.6 Fibonacci here, filling the gap and a lower high. Well, we're holding above that level right now. The doji was the candle of indecision. It did not produce a turn down back below it, as I talked about yesterday. If we hold above this level, we can go make new highs. And if we do make a new high, it's possible we move towards 5,300 area, which again, over here is 5,265, which again, it would be a possible topping process that would look something like this over here, as I've talked about again, where you get we had the November peak of 2021, we turned down, we rallied up, we turned back down in December, but then we rallied up in January to slightly higher than that level, and that was it. that was it completed the divergence, and we could see something like that where we just move slightly above this level. If we do, this trend line likely comes into play. I told you we were hitting the trend line in the monthly time frame from the tech bubble top to this peak right here, and we overthrew it. Last month we turned down off of it. This month we're getting back above it, and I told you that if we did go and try to hit the upper boundary of the channel in the weekly time frame, that we may hit the upper boundary here in the monthly time frame, not here on the linear scaling, but on the log scaling. Here we're coming back up above it again. Talked about these divergences forming again, likely forming a topping process. But because we're pushing above that line on the linear scaling again, if we do go up to the 5,300 area, you'll hit the trend line with the log scaling and slam right into it, which it's directly overhead. Our previous peak was, again, 52.65. You move above that, you're going to slam into this trend line there into the 5,300 range and form a divergence on the MACD. So if we do continue higher, again, that is the trend line that I'm watching. If we don't, if we sell off, we get a lower high, then I'll be watching how we close out the month, the monthly time frame. Last month, we turned down off that linear after overthrowing it, and then now we're back above it. So just some trend lines I'm paying attention to. We do go higher, and you hit the upper boundary of the channel in the weekly time frame. This trend line right here, again, you're going to be slamming up into this monthly trend line right here. There's some things to be aware of. You get a relief rally with the CPI or new highs with the CPI or some other catalyst going forward. That's the level where we have long-term major resistance, rising resistance here in the week, in the monthly time frame. And this trend line intersects with the trend line right here in the weekly time frame directly overhead. So something worth paying attention to if we do push higher with the CPI or some other catalyst. Even sell off and then come back up if we go down and fill the gaps, come back up. But again, we had a lot of choppiness here, before we did make that new high. Could see something similar to that if we do pull back. We had sold off in November, rallied, and then we had another sell-off there in December, but then moved to a new high in January. So some important trend lines I'm watching. Now we had the wholesale inflation come in hotter than expected. Again, I told you it may defy logic. May end up with a rally. We got to sell off the futures, and we ended up with a rally for NASDAQ to go back and fill the gap. Month-over-month numbers came in hotter than expected. For the headline number, it was expected to be 0.3%, came in at 0.5%. The month-over-month for core was expected to come in at 0.2%. It came in double that, 0.4% higher. Wholesale inflation on a year-over-year basis, the headline number came in at 2.2%, higher than the previous reading at 1.8%, and the core year-over-year number came in at 3.1%, higher than the 2.8% anticipated. Very hot report on a month-over-month basis. On a year-over-year basis, this is the highest level that the wholesale inflation has been at in a year. We've seen the previous reports elevated. Now, one of the excuses for the rally is by the financial media is previous month's reading in inflation, which was it was revised downward, so we got this rally. Any way you get it, this is a hot report, and again, the CPI tomorrow. We had Powell's comments, the market session, and he showed disappointment with the recent uptick in inflation, maintained a hawkish stance in that he expressed the higher for longer area that, again, he started expressing, his term, no rush to cut. Prior to that, he dismissed the uptick in inflation altogether, first couple of months there. So, again, Powell stating that inflation has been higher than expected, and, again, made comments regarding keeping current policy at the rate, the current rate for longer than he thought and the Fed thought. Again, ruled out a possible another rate hike for now, saying that he didn't think that it was likely, other than a hike, another additional hike, that rate policy would be held in place, rates would be higher for longer. Again, I think that that was probably the real reason why we got a positive close, is Powell again took a rate hike off the table. Again, I talked about the abilities for rate cuts in 2024. Yesterday it was at 2. It has been hovering between 1 and none. Moved back up to 2. That's for 2024. And right here, down below this line is 2025. Right here, this is 2024. And currently, under the inflation data, the PPI wholesale inflation, we have possibility of the first cut being in September or November for one cut, and then a second cut on the table for December or January of 2025. So again, possibly 2 still in play here after the wholesale inflation PPI data. CPI tomorrow, we'll be looking at what this looks like. We get that data. Again, the inflation data came in hot. In mind that the over month data was hotter than expected, and that the year-over-year data was hotter than expected for the PPI inflation. And again, inflation reports, sometimes you'll get usually the CPI comes in first, and sometimes CPI, it shrugs it off, but then we sew off with the PPI after. That happened many times. Maybe we rally, maybe the CPI does come in hot, shrug it off. For both the PPI and the CPI, I told you I was watching to see, do we get a lower high filling the gap, or do we make our way back up to the upper channel line on the weekly chart, and showing you for weeks and weeks now, nearly every single video. Tomorrow we're going to get the consumer price index. The month-over-month number is supposed to be 0.4%. For the headline number, the month-over-month for the core is supposed to be 0.3%. The year-over-year number is supposed to come in at 3.4%, which is supposed to be lower than the 3.5%. Remember, the headline number for the PPI came in higher than the previous number, but there were revisions involved here. But the PPI is supposed to come in at 3.4. At the previous reading on a year-over-year headline number was 3.5. The year-over-year for the core supposed to come in lower at 3.6, and the previous reading was 3.8. We're also going to get retail sales in the morning at that same time. Retail sales have more Fed speakers for the balance of the week. Now again, I told you to be watching the 10-year Treasury note yield to see if we pull back to the trend line and the moving averages, or if we try to bounce off of the trend line, the rising trend line. We're moving back, we're breaking the trend line. Initially, futures had a sell-off with the PPI inflation data, but then recovered, apparently because of the revisions. Later, Powell dismissing a rate hike, taking that off of the table, and that gave us the rally. So initially, we had a rally here, tried to get back above the 10 period, tried to bounce off of the trend line, but then broke the trend line here. The trend line, the channel might be changing. If we move down to the 200 or the 50 or horizontal support and try to bounce, we did get the 50 back above the 200. I told you that if we get an attempted move up to the upper channel line, we could see it move back to the moving averages or horizontal support should this level break. Well, it's now breaking. We tried to bounce off of it. We couldn't do it. So a potential bearish consolidation, if we break down below this level right here, we'll move down to test these other levels, that horizontal support, the 200, the 50 period moving average. So if we could see a further decline with the 10-year Treasury note yield and the dollar, the CPI tomorrow, again, S&P could try to move the upper channel line that I talked about 3.5 weeks ago. We talked about the test of the 20-week moving average, and I told you that we could see a lower high fill in the gap or a higher high in the upper end of the channel, and I've talked about it in nearly every single video. They're turning down off of the 20 period moving average. Again, they have both broken their downward trends. They have both broken above overhead resistance, but again, pulling back towards the moving averages here. We got a test of the 50 here. We bounced, and again, you got your 200 down here. You got a bullish golden cross. We'll continue to watch these levels and the horizontal support level. I talked about a back test in the weekly time frame or a pullback to horizontal support. And again, here's the horizontal support. We're pulling back towards it right now on the dollar. Here's the break of the trend line right here. We could still see a back test of this level. Talked about all of this when we hit that 20-week moving average. We do see a pullback. The market could rise and try to either fill the gap or move to a new high in the upper channel line in the weekly time frame. The S&P cannot make a new high. Then I'll be watching to see if we try to bounce here. If the S&P tries to make a new high, then I'll be looking for a bigger pullback towards our 50-period moving average, 50-week moving average here, and the trend line. We had the bullish falling wedge of the VIX breakout yesterday, and we tried to get above the 10-period moving average today. We couldn't do it. So now we have this gap. If the VIX goes back and fills the gap, testing the breakout, then we could see an attempt for that upper channel in the weekly time frame. If we end up getting a sell-off with the CPI, S&P can't make a new high, then again, if we are to see a sell-off, in order to have volatility, you got to get the VIX back above the 50-period moving average. Notice the 50 is just under the 200 period, and again, I'm watching to see if the 50 gets back above the 200, and if so, can it remain above it? I told you when we hit the 20-week moving average, we were coming up to these trend lines here and hit this one when we had bottomed out at the 20-week moving average. I told you we can rally back up towards the moving averages, towards the gap fill, or maybe even to a new high. We have filled the gap now, and we're just below the highs, so we'll be watching to see what happens here. By the way, we got a bearish engulfing on the Dow yesterday, but candlesticks have to be confirmed, as I've said. The Dow did not do that. It's just going sideways right now. We did get kind of a sloppy bearish engulfing candlestick here on the transports. With today's session, Dow was up, but the transports was down. So again, for the week, we're up 0.46%. I've talked about, again, the bounce off the 20-week moving average here about 3.5 weeks ago. 1 week from tomorrow, we get NVIDIA earnings, so that'll be, I think, May 22nd, 1 week from tomorrow. Again, I've talked about this chart. Even before we reached the 20-week moving average, I talked about it. I drew a channel line on the daily chart. We slammed right into it. Bounced off of it, bounced off this 20-week, and I told you, look, it's possible we have a bottom here, and if we do, we can rally back up and get a lower high to fill the gap or a higher high, and if we get the higher high, we can go up and slam up into that trend line and form a divergence. I've talked about this weeks and weeks, even before we hit the 20-week moving average, warning you that, again, the trend line and the 20-week is an area where we're likely going to get a bounce. Watching, are we going to get a lower high setting up like we had with July, or are we going to get a higher high setting up like we had in January 2022 or at the 2020 top? Divergences in both of those cases, a lower high in July. So again, I've talked about which will this be. And again, if we set up the lower high and we take out the 20-week, it would be a sign of weakness. If you drop below this low and you get a lower high and a lower low, okay, you can get a correction or a reversal. If we go up and we rally with the CPI or another catalyst, then again, this is the area. And I've already marked the divergence there just in case we did go to a new high. And I've been talking about this trend line right here, that this is the trend line where we would be moving to, which would be take us above the 5,300 area. Which is it going to be? We'll find that out tomorrow, whether we sell off at the CPI or we try to rally with it. Get back-to-back rallies with PPI and CPI, or do we get a rally with the PPI but a sell-off with the CPI? So again, just something to be watching here. And again, if we do go higher, it's likely that this divergence will form and produce a reversal. Now, while the S&P never formed a divergence on the RSI, just reached an extreme, we did have a divergence already on the NASDAQ. NASDAQ peaked the day after the Fed meeting in March, and we saw the RSI have a divergence, and a larger one from the July peak. The S&P never did form a divergence. We may get another reference point of a divergence if NASDAQ tries to make a new high. If the S&P does make a new high and NASDAQ does not, again, oftentimes they do diverge from one another. Turning points Doesn't have to play out that way. It doesn't always play out that way, but sometimes it does. We're paying attention to. But we went down to the 50 level on the RSI, and we've turned back up, and so far we have a lower high. Will we validate a lower high with price, or will we form a divergence? The stochastic's doing the same thing. Now, we still have these divergences. Now, we've rallied back up here for 3.5 weeks. Stochastics turned back up. We haven't seen the oscillators turn back up here. Again, there's still the negative diversions. Now, we may get one in the more recent price action, but it's still present. NASDAQ came back and filled the gap today. That was this dotted line right here. The Dow had already done it a couple of days ago. Previously, the S&P did it. Now we have the gaps filled. Now we have gaps down below. The NASDAQ, again, a possible divergence in play. The high is over here. We're watching to see if we retreat with a lower high if we go up above that level. Again, that is that 18,450, 18,500 area. The NASDAQ had the same thing with the S&P, and that is that we had this trend line here that we bounced off of, and again, hit it a couple of times. Talked about the back-to-back bullish candlesticks, the bullish bottoming candlesticks at that trend line. 2 weeks ago, we got that with the Fed, and then the day after the Fed, we got a hammer. We got the inverted hammer followed by the hammer. Had the same candlesticks form on the S&P 500. Talked about that. Told you that's why I expected a bigger rally, and I told you that we'd either go up and hit the upper channel at the time on the S&P, tried to get it in the 200 periods on the 60-minute charts. If we try to exceed those levels, to be watching the gap. So again, we are now filling the gap today on the NASDAQ. So we'll be watching, can we make a new high, or do we retreat off of this level of overhead resistance? Again, we're going to go higher. That is to a new all-time high. The S&P will likely go up to this upper channel line. If we can't do it, then again, we move back to fill the gaps, watching to see if we take out the trend line or take out the 20-week moving average, or if those levels hold as support. But there is a possibility of a topping process here with either a lower high or a divergence, as I've talked about, again, since before we ever even hit the 20-week moving average. NASDAQ's going back and filling the gap here, pushing to slightly higher levels than this level. Again, possibly forming a divergence. We're just below that high from the day after the Fed meeting. We did see the S&P have momentum turn up, and the Dow at the very end of the session on the 60-minute charts. The S&P broke out of a triangle. We've had a triangle for the last couple of days on the S&P 500. It broke out of the triangle, bouncing off the momentum cloud and the momentum line here, consolidating, and we saw momentum firm up in the positive region. So again, about yesterday that if we did get a rebound, leaf rally with inflation data, which it did come in hotter, but the revisions and then Powell once again dismissing the possibility rate hike, we got a rally with those two issues, and we've had a divergence here, and I told you evolve into a triple divergence if we went sideways and popped back up, which is what's happening here. We'll see just how high this takes us. Does it take us to a new all-time high of that 52.65 area? We're below that right now still, with the close at 52.46. Our intraday high was 52.50. So again, we're closing in on that area. As these levels hold up, and the 200 period moving average, the cloud, the momentum line, as long as these levels hold up, then we can go higher. If we do go higher, could form a triple divergence here. May not be completed. If we start to turn with the CPI, then maybe it completes. We did move to a higher high. We have a higher high here, and we have a higher high here. Can we go higher with the CPI? We sell off with it, so I'll be watching. If we sell off with it, we'll retreat from making new all-time highs. If we try to make a new all-time high, if we rally with it, upper boundary of the channel comes into play on the weekly chart, again, above 5,300. NASDAQ forming a potential divergence on the 60-minute chart. The S&P already had one, and now it's turning back up here, possible triple divergence in play, which I talked about yesterday. Again, I talked about how we had a divergence already on the Dow, and again, that it's possible we form a triple divergence. It rebounded back up. It had a little bullish falling wedge that had formed, and it rebounded back up on the 60-minute chart. Again, it too might form triple divergences on indicators like the RSI and momentum. Had both the S&P 500 firm up and the Dow today, as the Nasdaq went up to make a fill of the gap. And here is the Dow again trying to firm up with momentum here. We'll see if it can. The S&P did do it here. The Dow's trying to turn back up at the towards the latter part of the trading session there, and again possibly form a triple negative divergence on the RSI and maybe a divergence here with momentum. Again, I told you before the gaps were filled, P was hitting the 200 or the 20-week moving average. I told you that Dow may try to come back and fill these gaps, some of them or all of them, take the S&P back up to fill its gap or maybe to a new high on that weekly chart that I've talked about for weeks and weeks and weeks. And we have all the gaps filled on the Dow. The Dow is not making a new high. It is directly overhead. We'll be watching that. I want to bring one thing to your attention, that we have a possible 9 count that can complete tomorrow for the S&P, the NASDAQ. If it is to complete, bar 8 or 9 has to be the high of the count. Right now, bar 8 is the high of the count. As long as the S&P does not close below the bar from 4 bars ago, the count will complete. The count gives us a trend extension, and we get no pullback or a pullback and a trend extension or a reversal. It could be any of those three. Sometimes the counts play out, sometimes they don't. Here we got to bar 8 and it ended. That was it. It is interesting to note that as we're getting that potential 9 count in the daily time frame that could be setting up, and maybe we go to a new high, we are forming a 13 count here in the weekly time frame. Now we got a 9 count previously here. We still went higher, but then it played out. From the October 2023 low, we got a 9-9 signal. We went higher. It played out. Now we're getting a 13 here in the weekly time frame. And the count can produce reversal. It can produce a pullback. Sometimes you get the trend extensions showing price exhaustion in all likelihood, whether the 13 is a peak or whether we go a little higher like we did with the 9 count, but it's something we're paying attention to. I think for the NASDAQ, again, we went higher and we went to a new closing high. These highs back over here, we couldn't close. We reversed at these levels here. So we're at a new closing high, but not a new all-time high. We're still below that. We still may reach it, but you have a potential 9 count. The 8 or 9 count can be the high of the count. We'll be watching to see if we move to a new high or not. The weekly chart of the NASDAQ, there is no 13 count in play. We had a 9-9 count, and immediately we went sideways and eventually had this 8% sell-off for the NASDAQ. Now we've rebounded back up again to fill the gap. Today we filled that gap there, so we'll be watching. Does the rally continue? Do we go on and make new highs, or do we retreat? What becomes of these gaps down here? The trend line, the rising trend line, and again, want to make new highs, or do we get a lower high? 8 of 9 counts in play for the daily time frame. Again, these counts may or may not play out. Sometimes they play out, sometimes they do not. I'll continue to point out, again, we had at these bottoms, we got to bar 8. We never did get to bar 9, and we had already started the rebound. S&P hit that 20-week moving average, and the NASDAQ violated it just a little bit. Times accounts produce reversals and corrections. Times you get an immediate trend extension. Sometimes you overthrow the counts a little bit and then get a correction or a reversal. Sometimes it happens immediately. So again, put too much the candle until we get the price flip, until we start seeing close below the bar from 4 bars ago. So just something worth watching. But 8 of 9 counts today on NASDAQ and S&P. Again, the Dow has a potential 9 count, an 8 of a 9 count here today too. The 8 bar is not the high of the count either. 8 or 9 has to be the high of the count. The Dow filled the gap previously 3 sessions ago and has been flirting with that gap fill area. The highs are over here. We got a 13 count here. We still went higher before we got the sell-off. Here we got the 9 count. We still went lower before we got the bottom. So keep that in mind again. And Counts don't always play out, so don't think that they always play out, because they don't. Keep in mind that we're trying to set up these 9 counts. S&P's setting up a possible 13 count in the weekly time frame. All of this is showing, again, price exhaustion. Doesn't mean we can't go to new highs. Doesn't mean that the rally is over. Still may see the S&P go up again to that upper channel line above 5,300. Form a divergence on the RSI in the weekly time frame. Some trend lines. Again, if the S&P does try to go higher, now we have this point here, this point here. Do we hit it again? If we do, then we have the trend line from here to the low there, coming in near that level. And then we have the horizontal resistance if we push above 52.65. And if we get a divergence, levels come into play. And again, we do have a potential 9 count tomorrow. Count doesn't have to be the high of the count, but it's got to hold above the bar from 4 bars ago in the daily time frame. There's some levels to be watching here. And here you can see it a little bit better on the daily chart, that overhead resistance directly overhead right here. And again, these other trend lines I've talked about, again, this one from the low here, if we end up going higher and then coming back and breaking it, or if we establish a lower high, again, eventually taking out this low, you have a lower high, lower low. If we can't make new highs with the CPI, if we reverse, again, eventually this trend line down here, this larger channel comes into play. But again, I've been talking about this on the weekly chart, that again, we bounce off the 20-week. If we see this trend line hold, then again, this gap fill or this peak right here then come into play. Would be above the 5,300 area. If we can't make new highs, we start to sell off with the CPI data, break that trend line, break this low, then that would be lower high, lower low that could take us back to the 200 or back to the trend line near the 400 period moving average. So again, talked about the gap fill and this high over here for a very long time. We retreat, then maybe the gap fill scenario plays out, but it's still possible that we come up to this upper channel line on the S&P 500 before all is said and done, which again is very similar to the top formed in 2022, where we had moved just above that high, moving slightly higher. And again, that could take us to the 5,300 area. And that ended up being followed by a 27.5% sell-off on the S&P, a 37.5% sell-off on the NASDAQ.